Welcome to Investors Insights number 185. We will be discussing today the topics we need to be debating in this country. We appreciate you joining us, and also keep in mind we're on Facebook, LinkedIn, Twitter, as well as a podcast which takes the audio portion of this vlog and allows you to participate in all aspects of this discussion. We want you to hear us. We want you to discuss it with us. We like the debate. So let's move forward now and just see what we're talking about this week.
You're listening to Investors Insights with Greg Powell and the Portfolio Strategy team from Five Plan Partners.
Gentlemen, great meeting this morning. Really appreciate all the comments. Of course, last night was historical in terms of the presidential debate, and all eyes are focused on that. But we came in this morning, and it seemed to be a consensus that, you know what, there are so many other things we need to be debating in this country. Things that tie to the investor, to the American voter. And when I say investor and American voter, we've got to keep in mind that throughout this country, people have retirement plans. Throughout this country, they may have individual retirement accounts. They also have their individual portfolios. So those things ultimately impact people across the board, regardless of their economic status. So on that note, Bobby, you brought up a really good point about jobs this morning. And let's talk about that, because there's two camps out there. Are jobs really growing? Are they not growing? Is manufacturing rebounding? And then the other side is saying, whoa, what about higher interest rates? So talk about that for a sec.
Yeah, so we're going to show you what we consider the chart of the week. And so as you can see in this chart, we can see a downtick in jobs. On Friday, we had the jobs report come out. 156,000 jobs were created last quarter. And so if you look at that, that's a downtick. But problem is, it's still solid. The Fed is coming out saying that's still solid. And so the question is, are we seeing a market downturn here, a slowdown, or are we at full employment? And that's important for you as the investor, because when the Fed raised in December, we had a market pullback. And so we're looking at the election here, but we're looking at the Fed too, because that's really what's going to pull the market or make the market go up or down. And so if you're from the Fed standpoint, jobs are solid, not great, but solid. Earnings are ticking up, and then also the labor force participation rate is going up, and that's a new thing. Usually it's been going down.
That can be a positive there. Yeah. But then, Trey, you also brought in some counter there to talk about it.
So like Bobby said, earnings were up, but that's in terms of individual earnings. Wages were up. Wages year-over-year up 2.6%. That's the fastest pace in this cycle. That's good for individuals, good for the economy, bad for companies, because companies pay those wages. And if you don't have a huge uptick in productivity, then that comes out of the bottom line. And that's why we've seen S&P 500 earnings drop for 5 straight quarters. So if earnings don't pick up, then that market just gets more and more expensive. So what's good for the economy, what's good for jobs, may not necessarily be good for markets. So the Fed sees year-over-year wage growth. They increase interest rates. That may be good for savers that have stuff in cash and bonds at the bank. It may be good for the economy, but not good for the markets. Like I saw last year, markets trade off. Earnings never bounce back.
Right. And so emphasize again to our viewers, we're getting ready to go in the sixth quarter. This could be the sixth in a row with no earnings increases.
Exactly. With Alco, or with the company starting this week with earnings, we could see the earnings come in again negative.
Right. And another point that needs to be brought up is, has the market risen since earnings have not gone up? Has it been because of lower interest rates?
Right. Yeah.
Okay. We want to emphasize that. And then, Ashley, you were talking about from a global perspective, a trend that we're seeing that moving into 2017. So for our viewers, just to remind you, in less than 90 days, we will be in 2017.
Yes.
And so this trend that we're seeing, talk about that briefly.
Well, we promised you last week, one of the trends we look at is what came out of the IMF meetings last week. So we wanted to come back to you and report that. And the four of us see some very disturbing trends on that and what they reported as a group. And that trend is politically around the world. There are a lot of elections going on. And the trend is in all of those elections, not just ours, to have much higher trade barriers. There's a lot more political talk about that. So the effect of that, as a matter of fact, there's probably been more of that type of discussion since the late 1930s, where that was hotly debated. And financially and for markets, what happens to you is if you got a higher trade barrier, the first thing that generally happens is that prices go up on average about 10%. Then the effect of that is exports drop about 15% around the world. But the ultimate impact is it puts about a 2% overall drag on the worldwide economy. That is a trend we're really concerned about, because if you get 2% of a drag now on top of everything else going on, that would technically have you in a recession. So that's a trend we're really
Right.
watching.
I think the IMF is, and I think global central bankers and economists are also very fearful that their models don't know how to take into account shrinking globalization. For
Absolutely.
30 plus years, since these econometric models were built in the 70s
It's been growing.
that predict the future, and they always assume growth and globalization.
Right, correct.
Everyone's now talking about peak globalization. It must be bad. But it doesn't seem like their models know how to deal with that.
Right.
Well, and you're bringing up a good point. It's very hard for these people at the IMF, at the Federal Reserve, and other positions to come out and say, hey, we're just not sure, or, there's uncertainty here. That's the beauty of the discussions that we have as a portfolio strategies team, that we can look at it from different perspectives. We can have honest conversation. And then the other thing is, the reason we do these vlogs is because we fully believe here at Five Plan Partners that knowledge gives you confidence to overcome the fear. And as we move forward into this next year, we want to give you the confidence, or at least as much knowledge as possible, to understand what's making the markets move, whether they're going up or down. And we want you to see it from a lot of different perspectives. So on that note, we hope you have a great week, and we will keep you updated, because guess what? It's not going to be dull. Thanks.